Awesome, awesome. Thanks for joining us. We have today leaders in their different field. We have Tejan Conte from the banking sector, commercial banking. Is a guru. He's been in this industry long time. He's been a VP in multiple banks, Bank of America. Which other bank is that? Key Bank and Beneficial Bank. Wow, and the senior VP in Columbia Credit and also Pioneer Trust Bank. So a leader in that field, and it's a privilege, great privilege for us to be able to ask you a question, these questions that we're going to get into today on your journey, on your career path, on things you learned that you'll be willing to share with the younger generation and mentor us that want to learn. So it's a blessing to have you with you, and we really appreciate you taking our time to join us. With me, that will be, willing to learn and discuss for the most part is Ikemka from Ikemka Holdings, a top real estate guru in the Oregon area. So yeah, we're happy to have this conversation with both of you. I'm Tayo, and yeah, just here to learn and converse and ask the question. And also, I forgot to mention that Tijan also is a business owner in the Oregon area. He owns PDX. What's the full name of your business? PDX,
Lagos
Lagos
PDX.
PDX
Yes.
Restaurant and Lounge in Oregon area in the Portland area. So amazing journey, multi-millionaire. So we won't get into we won't sing all the praises at once. So
Don't.
um, do you have anything you want to share with our audience as we get started, just to get the conversation going?
Yeah, thank you. Good evening, good afternoon, good morning
Mm.
to everyone, wherever you're watching from. Glad to be on the platform with these great minds. And Tayo is downplaying his awesomeness, but yes, we do know. And thank you for your time and deeming it fit to bring me to share my tiny journey in life so far.
So thanks for that intro. Ikem, do you want to share anything for
Well,
starting?
thank you so much, Mr. Tayo. Thank you so much, Mr. Tayo. It's always a pleasure to be a part of, the conversation going on in this day and age about what's happening in the economy, in the banking sector, in the real estate industry. It's always changing, right? It's so volatile. Always change is never steady, is never the same. So I like to continue to have conversations daily, to talk to people, mentor. And I myself, I'm learning. You can never stop learning. When you learn, you grow. So I'm here to learn as well from you, from Tijan. So let's get this started.
Amazing. Thanks for that. Okay, let's get it started. So let's do it. First question, just to set the ball rolling, is from all your experience, what are some of the things that you've held on to, or you think you want to share, anytime you speak to people about your career, going from all these banks and from all these multinational companies, what has been your experience so far?
Uh, One thing I always tell people is that is my tenacity. I'm that has been one thing that has been the driving force behind me. You got to understand that for you to achieve certain success within the world we find ourselves, um, you know, you have to be persistent, consistent, and you have to. It just has to be that you have to be able to be hungry for success, which for me has been a great. That has been one thing that I that drives me every day. Success, just success, and my love for people and to be able to teach. Essentially, I found out, during the course of my career that uh, I'm a teacher, and I wouldn't say a great one at that, but enough to be dangerous in my world. The people I come across, the C-suites, the CEOs, CFOs, and COOs, the C-suite and business owners of either multinationals or the mom and pop small business, is they're very great at what they do, but they're not. They do they do not have the knowledge, or some who don't know it in depthly to be able to to traverse and be able to um, actually go through the whole the banking sector and the finance world. So I find myself, as a teacher in this field, not just only to colleagues and friends, but also to business owners. And that for me is been that's the driving force. That's the thing that gets me out of bed every day. Aside from the fact that my kids need to be, they need to make it to
Funded.
university without any debt. So
Wow. Yeah, that is important, I think.
Right.
Quite important. Yeah. So yeah, good, good, good. Yeah, like we can get into some of the questions we have here. I don't know.
Yeah, I like what he said. Can I just from what you're saying, right? The tenacity, the persistence, you gotta love what you do. It sounds like you love what you do because it
it's
doesn't feel like a job, right?
it's not a it's so and just so again, just to kind of to give you a bit of a to throw more sugar on what you just
Mhm,
said.
mhm,
It's
mhm.
the moment you don't love what you're doing, you're in the wrong profession. The
Yes.
moment there's no drive beyond the financial gains of what you do, you
Yes.
are in the wrong. You're
Absolutely.
either at the wrong job or you're in the wrong field. You need to
Mm,
go find what your
mm,
passion is and go
mm.
pursue it. It should not be a. You should be able to wake up and say, I am going to make a difference today.
Yeah.
Yes, it comes with the rewards,
Mm.
but it's supposed to be first and foremost something because you love it.
Oh,
And that's, yeah, for me, I can talk all day.
yeah.
I don't mind. I take calls. I even I teach classes to new businesses, immigrant businesses.
Mm,
I haven't done a lot of that well, we've only just started this year, but in the last quarter, because of travels, I wasn't able to do a lot of that. But I used to
mhm,
every Saturday or every other Saturday,
mhm.
these immigrant businesses, be it those who just moved here to setting up a food cart to, a little window shop to I teach them about, getting bank ready. And so, yes, for me, it's a second nature. I love it.
Yeah, that's
It's,
good.
yes, it's the
That's
love I
good.
have for what I do. It's not a job for me. It's more of
Yeah.
it's a lifestyle.
Yeah, you gotta love it. And I just thought you just talked about food cards. So you're talking about immigrants, you're talking about food cards. So that kind of transitions into our first question because I do a lot of residential and you're doing commercial. So food cards, let's think about or let's talk about the financing for food cart. Because obviously, for this immigrants who wants to own a small business, right? The food cart financing is different from the financing they're going to need to purchase a house. So how does that conversation start? So that getting into the first question, how does the conversation start and what are the needs or that they would need?
Yeah, so great question. On a wonderful segue, actually.
Mm-hmm.
So the difference between commercial lending and residential
Mm-hmm.
is basically the metrics that's used to measure.
Right.
Residential consumer is
Mm-hmm.
tied to a person's. They're tied to a few um, boxes that you need to check.
Check.
One
Okay.
is the credit aspect of it, and two is the debt to income ratio, which is the DTI.
Mm-hmm.
Um, Whereas in the commercial space, there are different other boxes that you need to be able to fit into. One of them is depending on if it's an owner-occupied sort of real estate
Mm-hmm.
purchase or business purchase. There's a cash flow aspect of it. For business lending, it's a straightforward cash flow. And if it's tangible asset purchase, commercial asset, then there's also the LTV, the loan to value, and DSCR, which is debt service coverage ratio, meaning how much of the income is that asset producing that can pay for that expense, meaning how many times, how much dollar does the business make is going into its debt to service its debt.
So that's profit. So the profit of the business, how much
yes,
after they've broken even,
margin,
right?
kind of.
Yes, it's a margin game, but it's more of a debt service. So how much debt, how much per income goes, how much debt, how much per income goes into its debt. Yes. So how much of its income goes into its debt?
And the goal is net positive, right? That's what you're trying to.
It has to be net positive. Yes. At the minimum, you want to have a 1-to-1. You want to make sure that if for every dollar that the business is making, they're paying $1 to the debt.
And that makes them break even.
That is a break even. That is okay. You're fine. You're just making, you're surviving.
Right. Okay.
Now, each financial institution has its own minimum measuring yardstick on that particular, because on that particular formula. So if you have a debt service ratio coverage, or the debt service coverage ratio of 1.1 or 1-to-1. So every $1 you make, you're spending $1 to service your debt. You're just getting by. You're not making money. There's always a buffer for financial institutions. They want to see a little bit more, meaning, okay, for every $1 that they make, they're spending 75 cents of that on debt. So there's a little cushion.
Yes.
So just in case if there was an unexpected expense within the business year for that business, there's some little buffer. They're not going to go below.
Right.
And then so the DSCR, debt service coverage ratio, or the loan DSCR, is basically the key tool that we use to determine if financial institutions, or if lenders would be able to afford the affordability of what they're trying to achieve, be it buying a commercial real estate in which their business is going to operate. We want to make sure that, yes, this business is good enough that they are able to make money to buy this building that they want to buy. When they purchase this building, they would be able to comfortably move into this building and not have to worry about, taking on extra debt.
Okay, got it.
And then also, depending on that is one of the stools, or one of the legs of the stool of commercial credit. They want to make sure that that business is viable enough to be able to pay for that new purchase they're trying to make. Now, there's also the loan to value aspect of it, meaning, okay, you want to buy a building that is worth $10,000, just for the sake of, let's imagine this was 1960 and $10,000 will get you a commercial property. You want to buy a $10,000 building, and the bank says, we want to see that you have skin in the game. We will give you a value. We will loan you a certain amount of the cost of this building. So loan to value, LTV, as we would abbreviate it within the industry. We usually, financial institutions also have, they have it in their credit policy of how much they will lend to each criteria within the loan to value space. Anywhere from a 50% to a 80% to 90%, depending on what it is. Now, the lower the more you bring to the table as the borrower, the more comfortable the financial institution is to give you money, because now there's still some buffer in the event something goes wrong. There is some room for you to say, oh, fine, well, okay, my risk on this property is 50% because I'm only giving this person 50% of this debt. If they decide they don't like this building anymore, or the roof is leaking and they don't want to pay for the roof repair, well, no problem. They will. I'm only losing out 50%.
Yes.
And this also emanated from years of back when banks would put up properties for sale, and then almost immediately, because it's been sold by a bank, it's considered a foreclosure. The value becomes pennies on the dollar. So that is also that aspect of it. Now, the third, which it depends on if this property is not being occupied by the business, or if it's an entity that says, you know what, I want to go into real estate investments, and I'm looking to buy this strip mall. We would then calculate what we call the NOI, net operating income. So for all the rents that is being collected from that building, we want to ensure that all the rents are able to make all required payments on that building, which is the debt, which is the loan, the insurance, repairs and maintenances. So all of that. So we then go into the NOI, the net operating income, on the property itself.
Okay. So talking about NOI, so the monthly, maybe I'm stepping ahead of myself, but the monthly in a commercial, while the residential has the mortgage is made up of the taxes, the insurance, on the commercial side, it's not made up of that, right?
No, it's not.
Okay.
No, we do not. If I'm understanding, you're referring to maybe in the case of an FHA loan.
All right, whatever loan on the residential. So
yes,
commercial loans are different. So when you're paying
just the loan. You're
the
not.
loan,
We
the
do
principal
not.
and interest.
Yeah, we don't collect for taxes and insurance.
Got it.
That is separate. I mean, there are certain institutions
that do that.
Non-banks do things like that, but that's mostly most financial institutions do not.
Okay.
That we do not want to inundate or worry ourselves with that part of it. Even though we want to see that you are making those payments, because one, on the insurance, we are named as a loss payee. So we do get, just like if you rented an apartment and you stopped paying your renter's insurance,
right?
The landlord is notified immediately that you're not paying right. your insurance premiums. So financial institutions also get told that. Right. We're notified that, hey, they've stopped paying insurance premiums, so you might as well let them know. And it's also pretty much similar with when it comes to the taxes. The counties, most financial institutions pool annually. We have people, operators within the financial institutions that pull these reports, and we know who is owing what on our properties that we financed. And in those cases, we reach out to them and say, hey, can you provide us evidence of this being paid? If you've paid it, and if not, can you go take care of it and send us evidence of it?
Yeah, that's true. Actually, I had a client that they hadn't, for whatever reason, their insurance had lapsed or something. And I think the bank called me or someone called me and said, listen, you need to get a hold of your client and tell them they're missing. They need to go figure that insurance or something,
Yes.
So that has happened to me in the past.
Yes.
So absolutely. Okay. Thank you. Tayo, do you have any question, or should I go ahead?
Yeah, I have a quick question on this. So when you say readiness for immigrants, how does that play into all this? What are the things they need to do to be able to get to that point where they can? Because now they can't demonstrate anything. So what are the steps you guide them on to get towards that part?
Yeah. So in most cases, most financial institutions do not necessarily take on or lend to businesses that are between 0 to 12 months.
Okay.
Banks and CDFIs do not typically give. We don't give funding to, or we don't lend beyond just business credit cards. Some institutions will give you business credit cards, but most of them actually would not even give you a business credit card. They want to see that there's at least a 12 months history of performance, meaning the institution has operated for 12 months on its own merits. And then afterwards, some will then look at you, others will wait for 24 months. So in those cases, there are other non-for-profit organizations that would take that leap with you in the sense that they will be able to provide you seed money, soft loans. Some would even give you grants, depending on maybe your the DEI parameters. So there's a lot of that. And then some would even give you those grants based on the county, the city, and state, just so you are encouraged to be self-employed. And then I think the governments too also do something similar, where they will give you some incentive or pay you some form of a stipend for just so you're able to get on your feet within those periods. So in those cases, what we've done is given them access to capital, meaning we've matched them, paired them with a lot of these small these organizations that are doing that. That gives them either loans or grants. Just the top of my head, Craft 3 does that. OAMI does that. There's a few of them that actually do, but there's a lot of also resources that we will pair them with. We'll find and refer them to, and say, hey, this is where you'll be able to get money. In the case of some of these guys that are actually even setting up, looking to set up food carts, they're even able to get loans to buy the carts at very minimal interest rate, but short-term loans. Now, within that period, within that 12 to 24 months period, now they're ready to be taking over, or those loans are ready to be repaid.
You track the
They're
journey.
encouraged to go to the banks and go refinance, just so that those funds are they're given back to those organizations so that others can benefit.
Wow.
So you track their journey.
Yeah, transition them onto banks. Yes. I've worked with many of these guys, even from the bank side, with the nonprofits that do these things. I give them initial seed money or just startup loans. And eventually, then they then turn around and then they go to the banks and refinance these things. And then they're able to pay back those loans, those initial loans, and then now they're bank ready. And we also teach them in conjunction with one or two CPAs and accountants that the key player in all of this is paying your taxes, ensuring that you are paying and filing taxes, because that's a big document tool both in consumer and commercial lending. We want to see documents that was vetted by the government, and in this case, the IRS, to say this person has filed X with us and we've seen it and received it, and that they've either paid their dues and taxes, or, well, they've overpaid and we've given them back this much. And in the event of those businesses, we also encourage them to make sure that when filing, that they're definitely putting those on there, either under a schedule or filing them under If it's going to either be a Schedule C or it's going to be a standalone. If it's a C corp or an S corp, but they're ensuring that they're filing those business taxes. That's the only way they're able to access either business or commercial lendings. When it comes to small business or commercial lending, when it comes to either growing that business or just stabilizing the business.
And those taxes have to have a positive, because there's some taxes that file losses, some business that file losses. So it's not just a filing, but making sure they're not filing at a loss. So does it not matter?
Now we're going into some other area.
I mean, if I come, maybe my business is 2 years old and I filed taxes for 2 years, and 1 year is a loss, and 1 year is, I made a profit. How does that look to you?
Yeah, that's a great question. So it's very understandable that every year is not going to be rosy, especially in business. So we understand. In those cases, there's also, now it's a 50-50 chance. There was a good year, there was a bad year.
Right.
Okay, is there a third year, or what's your numbers looking like year to date? You've had a year where you were down, then you had another year, you turned that around, you managed to stabilize it. So what's this year looking like? And in such cases, what we call a year-to-date financial statement, not file taxes, but in-house prepared, or accountant or CPA prepared. Those will give us an idea of, they've had one bad year and one good year. But the tiebreaker here is, so far this year, they're on a track to make a positive. It's gonna be another good year for them. Right. So that makes the decision makers, like myself, more comfortable to say, okay, I think it's fair. I mean, they had a bad year. We all understand. And then, yes, numbers do tell a story. You also want to see why that year was not so great, or what happened, and why, what gets turned around. And then there are certain things that are also, we can write off within their taxes, and say, oh, well, this was okay, that was okay. But another thing that we tend to tell in these classes is that they should not misrepresent the true statement of their business, revenues or expense. They should not overinflate expense. We tend to not want, but certain certain individuals, dishonest professionals, tend to misdirect people by telling them, oh, we'll do this, so we'll get you a good return. Right. And most of these were not the true representation of what that business did that year. And in those cases, there is misrepresentation to the authorities, and thereby just to say, nothing to see here, I did not make money. So, but what they do not understand is, in those cases, it's not only deceptive to the government, but it's also, it will harm it does your business more harm than good. If you are inflating certain areas just so you can maximize what you're supposed to pay.
Right. Makes sense. Okay, thank you. Tayo, do you have any? We haven't actually gone to the bulk of our questions.
Yeah, we can actually go into. I'm enjoying this. I'm learning a lot.
Yes. So thank you so much. So
yes.
Talking about the economy and interest rates, I know that interest rates are different from commercial banking interest rates, different from residential. So why the difference? Is there a difference? And, how do they differ?
Yeah, so with the consumer lending, it's basically, it's usually tied to the prime, basically, or the treasury. Whereas when it comes to the commercial space, the consumer gets I guess the calculation is based on the treasury rate, whereas the commercial, depending on the financial institution you're talking with, we all have different metrics that we measure them with. We would go, some cases we go with the treasury, we go with the prime rate, we go with the SOFR, which was the one that replaced the LIBOR a couple of years ago. Some institutions even go with what they called I'm drawing a blank now. Acronyms is all that's in my head.
Right.
The FHLB, which is the Federal Home Lending Bank of different regions. So the FHLB, the FLUB, as we call it, is also another, metrics that certain institutions use. Now, these are all tied to market parameters and conditions, which then creates a fluctuation on a periodic basis. And most commercial business lending are tied to these things because of a few reasons. One is these because they also fluctuate a lot, and then depending on what the request is or what the need from that client, we would then use whatever what we think would be fair. In some cases, like for instance, most commercial lines will be tied to the prime rate, whereas we've also seen commercial real estate purchase that is tied to the prime, but at a fixed rate, meaning it will be fixed at the time of booking that loan. So if it was quoted a prime plus one during the underwriting, on the day the loan is booked into the system, it will forever remain prime plus one.
Wow.
For the life of the loan. And then some of the reasons why those are done this way is because commercial loans are not typically, they might be amortized over a lengthier period. There's always a term involved in it, except if it's a government-backed program, maybe like the SBA programs. Most commercial real estate transactions are tied to two things. They're tied to a term, which might be a 25-year or 20 years. They're tied to an amortization period, which is a 25 or 30. And there's a term, which is a 5, 10, 3, but there's always a break somewhere in between after a certain period of, it being fixed. And that is basically because, well, two things. One, it gives the borrower a chance to go and shop the rate and see if they want to, if rates had moved in that 10 years that they've had that loan, that they can then go out and say, oh, well, the rates have gone down by a significant, decimal. So I am going to go refinance this at another institution, or talk to your same financial institution and say, hey, rates have dropped. What are you going to offer me for this? And then also, it hedges the risk, the interest rate risk for the financial institution as well.
Awesome.
Thank you. Yeah, Tayo, do you want to go
Yeah,
ahead?
I have a quick follow-up on that before we pivot to something else. So you said something about the government-backed loans, like SBAs, and over the years, I've heard that you don't need to have any money to do commercial real estate because the government wants housing solution for everybody. So if you are good at that, you will get it easily and things like that. Is that the case, or there are some nuances to it that makes that complicates it a little bit for new beginners especially?
Yeah. So that's a great question, Tayo. So their government-backed programs, basically that shifts a lot with the needle. That needle shifts a lot with the need at with the need at that point in time. Giving you a simple, for instance, right now there is a national housing crisis. So there's the clarion call for affordable housing. In our own dear state here, Oregon, there's there's the governors, the last two governors, and the current one they're all just beating the war drum on let's build housing, let's build more housing, let's wrap our hands around this, on the homelessness, and with that, there's been a lot of incentives that have been put in place statewide. The state of Oregon has got a few loan programs that, some of them are even as much as giving you zero interest rate for 30 years, 60 years, just so you can build, more affordable housing, apartments, single families, condos, and sell them on, affordably to people, just so, one, it's creating wealth, two, it's curbing the menace of homelessness. And then so a lot of institutions have taken advantage of these type of, all institutions and individuals to create or apply for these programs with the government. And and in most cases the government is willing to give you so much, they come to the table with a lot of incentive for you to be able to create this. In a nutshell, they're like saying, yes, no, you want to do that on that your piece of property, we've got you. Yes, we've got you. And then they'll fund you almost all of the money you need to be able to do that, to build these properties, either single families or apartment buildings, multifamilies. The only caveat with the government is that property then becomes deed restricted. It cannot be, it will remain affordable property for the duration of their loan to you, or their 0% loan to you. And, so yes. So all of these are available. And then it's, a lot of folks, even with little to nothing down, as long as they've been able to say, oh, hey, government, I have this piece of property. It's 1 acre, it's 2 acres. This is my plan. These are my drawings. This is what I'm looking to do on this property. And some of them, when the government then goes ahead and determines what they would front you to construct, what most of them have done is gone to commercial banks like ours and said, hey, the government says they're going to give me 95% or 80% or 82% of the money to build this structure. I need 15%. And, the banks have turned around and said, oh, wow, yeah, no problem. And one of such programs is called a LIFT, low income flexible housing, or I can't remember the F. So it's called the LIFT program. And then we also have the LITEC. So there's a bunch of these programs out here. And most of them are actually just state driven. And then they've been very, 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 they've made it very flexible for you to be able to get access to funds to be able to build.
Actually, I agree with that. I actually have a client who LIFT, I think it's LIFT, I can't remember.
LIFT, yes.
I'm looking at $1 million, that they're looking to give this client for a daycare, a subsidized daycare program.
Yes.
So I'm actually working with one client like that right now, currently.
Yeah.
But the only thing I'm seeing with this particular transaction, because it's government, it's taking forever. Like it drags. I mean, we're honestly like almost a year.
Yeah.
So we're finding the landlord isn't that patient anymore to just be waiting. There's always some protocol, bureaucracy, so that program is there because I'm currently working on something like that.
Yeah. With the LIFT housing, affordable daycare and all of these wraparound services that come with creating environments, creating housing is also, well, yeah, they're looking at it. You're right. The lift looks at, a whole slew of added services to make, those, I mean, schools affordable, schools accessible, daycare accessible. So these people, apart from getting housed, can go out and look for work and can be able to be gainfully employed.
Exactly.
But again, like anything with every government, it goes through a lot of desks. And because it's also, these programs are very almost cheap, almost, now when we want to use the word cheap, they're available. They need to also make sure that they're dotting their I's and crossing the T's and making sure that there's always, it comes with a lot of paperwork. The LIFT program, I've done a ton. My team and I are working on one as well. Well, not one, with maybe two right now. But it takes a while. And yes, that does happen with the program.
Yeah. So I mean, I think that program, government stepping in is truly helpful to the community. Truly, truly, truly helpful to the community. It just helps, the community thrive. Right? So it helps the community thrive and grow, and people are able to go out and work, so the government comes stepping in to help, it gives like, families confidence to step out and say, okay, I have the government backing me. I can actually go out and try to do something to get out of the current situation I am in.
Yes. It does come with, I mean, I'm board chair for the largest affordable housing provider in Oregon and Washington State, Reach Community Development. But even with, you'd think even with a provider that large, we already have the process down, in the sense that we've got people that can turn these documents to the government in days, but it still takes a while.
It takes a while.
It takes them a while to
Yes,
go
it
through
does. It does. It takes a while, but if you're patient, the patient dog gets the fattest bone or something.
It
If you're
does,
patient, you will get it. So it's just a lot of patience, but it does happen for some people. So okay. Thank you. Taya, do you want to? Ty, do you want? I mean, I have a lot of questions. I mean, I could just
Yeah,
continue.
but because of time, I think we're not going to get to ask any personal questions on career growth if we go with some of the ones. So, you think we have enough professional ones already?
Yeah. Oh, yeah, yeah, yeah. I mean, right now,
if you let Sister Nkem go on, she has.
In fact,
I have a bill. Her bill on my. I have a continuous going invoice, so I have not sent the final invoice to her yet. It's been from like a few years.
Just keep adding to my tab. Don't keep adding to my tab.
Okay, so if you want me to go, I have a couple of questions.
Go ahead.
Career-wise, because when you are in front of greatness like this, you need to be
just
leaning about your career. So my question is, what do you, if building a career and growing a career to this level, becoming a senior VP and just grinding all the way to the top, what are the importance of being able to move at the right time, strategic transitioning, based on your experience from the couple of transitions you've made?
Yeah, great question. Thank you very much. So I've made some transitions that were purely they were career chess moves, and then there were some were just because the institutions themselves or people, certain individuals that I've worked with have not either been forthcoming, or the leadership management style is not something I want to be associated with, and I am not afraid to walk away, because not to toot my own horn, I think I know enough that if I speak to any group of individuals or organization, or they'll find value in my person and what I will bring to the table. However, I also do not, I've seen leaders that have managed up. They have managed, instead of managing the folks that are below, they've managed up, meaning they want to be seen by the next level up, which is not wrong, but it's just you got to be able to. There has to be a fair balance of, representing the people that you supervise. And if you're not seen as a person who's representing the people that you supervise, then you are trying to make them see that you are you're the yes sir man, and I'd step away from that. But I've also made great career chess moves that has seen me, grow within these organizations that I have worked in. And in some cases, I feel like I have outgrown certain institutions because of certain, glass ceilings that certain people have set for certain, individuals or certain group of people. And I am not a conformist. I do not conform to glass ceilings. I don't believe any person has any limitation. And I would, it's like you're driving behind a slow person on a fast lane. I will either flash my lights at you and tell you to move over, or I will take the slower lane and get ahead of you. Yes. So most of my moves is just they're for very the specific reasons, and those it's either it's one I can't turn away, and in my industry, financial institutions are always looking to get the best into their teams. Everybody and there's no week I probably wouldn't get an email or a voicemail from a recruiter, either from another institution or an independent recruiter that is, a headhunter, looking to say, hey, so institution wants to talk to you. They've caught your attention, or you've caught their attention, and they want to meet with you. They want to have coffee with you. I mean, most cases I will politely decline and say no, thank you very much. But in some cases, it's like, well, yeah, let me hear
Why not?
why they want to talk to me. You know, but again, you also have to be able to make those moves very strategic.
Yeah.
If not, you lose the crowd that follows you, which is very big in this market, in this industry, in this sector. If you have an audience, you want to be able to, you want to make sure that your audience you carry them along. Your centers of influence and your loyal clients, you want to make sure that their needs are being met, and they're not all going to make every move you make, because of course some of these multi-million-dollar institutions are not. It's not easy for them to just pivot and pack up and move to your bank, another bank, just because you've done that. So you got to be able to manage such moves.
Yeah,
So,
yeah. What I hear you say is, and that's very important for anyone as you grow, you know your worth, right? You know your worth because, you're pouring back to the community and people are watching you, basically. That's what you're saying.
Yeah.
You've got some silent followers. Some are silent, some are not
Yes.
silent. So you have followers, people that are tracking you.
Yes.
So you're mentoring, whether silently or not silent, you're mentoring some people, along the way. So the decisions you're making could even confuse someone who you're
It does.
mentoring.
It,
It
in most cases,
confuses
it does.
them.
Yes.
Yes, it confuses. And then they're like, why? I don't understand why you did that.
Yes.
I don't understand why you did that. So, yeah, 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 yeah. Are you
in
there?
Oh yeah,
Okay,
sorry. I
okay,
just
okay. Yeah, yeah.
wondered.
So it
Yeah.
confuses some people. So So for those out there, right, when you find a passion, like, listening to you speak, you found your calling per se in business or in the financial world. So stick with it. It's more like a hobby now. You're getting paid to for your hobby, right? You're getting paid a lot of money, I must
Please
say.
don't let beneficial hear that.
But you're getting
Don't let
paid,
pioneer hear that.
So when you start something, stick with it. For
Yes.
for anybody out there,
Yes.
as long as it's your passion, stick with it, grow in it, and
Yes.
you're mentoring people along the way. And then you can, pick and choose,
Yes.
when as you grow,
Yes.
right?
Yes.
You couldn't do this maybe 15 years ago,
No.
right?
Yeah. No, rightly said, Sister Kim. There is an incubation period especially in banking, and
Mm,
if you want to be a career banker,
right.
and grow within the business world, there's you got to pay your dues
Pay your dues.
within the period. And those times is when you hunker down through thick or thin.
Right.
You learn the ropes, you build a network of, and then by learning the ropes, the most important thing is, and this is what I tell a lot of the newer bankers, and even those that care to listen that are not in the space, is bankers are advisors. They're trusted advisors. They're allies. They're your biggest allies. They're your trusted advisors. They're not order takers. And the difference between an order taker and a trusted advisor is their ability to bring something to the table. Now, you're not going to bring anything to the table if you do not know your onions. Banking is broad, it's wide, and it's very number driven. If you do not, you know, sit back and learn the ropes, there's a lot of great people that today have either moved on from banking or still in banking. Egbon Shege, he's still
Right. 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 Right.
holding it down.
Yes,
Babatunde
he is.
at B of A,
Yes, yes,
my
yes.
darling sister,
Mhm.
Kenichi,
Yes, yes, yeah.
so there's a lot of, people that have paid the dues, and then
Mhm, mhm,
even in the middle of the night, if you woke them from their sleep, they will tell you,
mhm,
they'll advise you, with they'll advise you in the right path. So there's a time to make those moves, but in the initial, you got to be able to sit back and learn the ropes.
mhm,
That's what a lot of these newer guys, I tell them, I was like, you have to learn the ropes for you to be able to say, I have earned the rights to advise you on any level. You must know your onions. It's not something AI, Chat GPT, or any of these guys will teach you.
mhm, mhm.
They'll provide you with solutions because they're very intelligent. But
Right.
that's not it. It's not
Mhm,
an intelligent based conversation that you have with these C-suites. It's more of a relationship based. Well, what are you trying to achieve? So I don't think you should do this. I think you should do that. And that comes with the industry knowledge. And it's a continuous process. Even me, I'm like, sometimes I look at these articles and I'm like, oh, manufacturing industry. Da, 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 da. Okay. Well, hey, maybe this, maybe that. But it's very heavy. It's very numbers heavy. Very numbers heavy. A lot of folks come into it thinking, oh, is it not a sales job? I
yeah.
can, but you will fall
Yeah.
flat on your face
Yes,
selling.
yes, absolutely. Yeah, yeah, yeah. People don't really know what goes into what you do. They look at face value and say, is it not just this? I can do it now. They don't know. There's a lot behind it. There's a lot. Thank you so much.
No.
Thank you. I have one question though. I mean,
Yeah.
going back into financing and just the state of the economy, like in the residential sector, there's just so much um, instability. I don't know if you're finding that in the commercial sector. I mean, there's been a lot of layoffs, with what's going on. And those that do have jobs don't want to purchase anything. They'd rather hold off for now. Not that they can't afford it, but they're just in the economy just unstable right now. So are you finding a lot of sales in the commercial lending? Are people still buying commercial, or is there a slowdown? I mean, what are you feeling or sensing?
Yeah, there's a lot of cash in the system. There's a lot of cash. People have money. They're sitting on it. Yes. But in our world, yes, it's still going on. It's not stopping.
Wow.
It's still it is. We're turning away
Interesting.
transactions. We're saying no, thank you
Wow.
very much.
Really?
No. Yeah. Yes.
Wow.
Well,
Okay.
so you in the non-consumer space, there are two different there are two major players here. There's the businesses that are looking to expand and needing extra room, extra space, extra warehouse, extra manufacturing hall, maybe this, maybe that. And there's those who are just investors in the space.
Interesting. Okay.
I am looking to this. I've got this. I've got that. Now, certain areas have gone down, but others have turned up from there. Office space is.
Okay.
I don't think there's any financial institution that wants to take on an office purchase.
Right. Exactly.
Because that's not the path of people. People are not going into offices.
Right now.
Yes. Right. Now, but is this a medical building that's got doctors' offices, oncologists, I don't know, dentists? Yes. People are purchasing these things.
Yeah.
People are, saying, "Oh yeah, there's a doctor's office building. I want to buy it. There's this. I want to buy that." So yes. Right. So the investors who got the cash are buying. Yes. Now they're not buying office buildings. No. Those who are into the multi-family space, yes, they're buying and they're building. And yes, you find buildings popping up almost everywhere. Wow. And they cannot be done before it's leased up. It's done one day, it's leased up the second day. Yes.
Interesting.
It's the spending power of the consumer that is a little restricted, because a lot of those are coming from the income, and then if your income is not growing fast enough to catch up with the inflation that's going on in the economy, well, then your buying power on properties are almost impossible.
Right. I agree.
If you're spending 2x what you were spending on feeding your family of 4, which then comes off that income. Now, are you able to then afford to buy a home where your interest rate is all of a sudden at 6.5% or 7%?
Exactly.
Over a 30-year period. Once a DTI calculation is done, you're almost always you're short. They're going to expect you to come to the table with a lot of money.
Absolutely.
Which is not readily available for the consumer.
No. Yeah, for me, what I'm finding in the residential sector, where I used to be picky before and stick to a certain area, Beaverton, Hillsborough, now I'm going to Southeast, I'm going to the coast, I'm going to Salem. I'm not picky anymore, because I go where the business is calling me, just because of the economy. Before, I mean, nothing will make me drive 10 minutes within my area, but now I'm driving an hour.
Yes. And then what has also happened within that space is affordability and the cost of properties in certain areas, which very well, Sister Kemi, those properties they're out of the reach of the average consumer. They're now within the reach of just those who are the middle cater of people, the 100,000 and above annual income homes. They're the ones who can afford some of these purchases. Even those, most times they're struggling, to make those purchases.
It's true. It's true. Because right now people are going to Forest Grove to buy. I mean, nobody would buy in Forest Grove before. Forest
No.
Grove is about maybe an hour, well, 40 minutes
40,
away.
40-ish minute, yes.
Yeah. But now people, because homes are cheaper there and they get better residential loans, because
Yes.
it's considered
It's
agricultural.
agricultural, rural, yes.
Exactly. So people are actually purchasing further out because they have better buying power.
Yes.
So, but commercial doesn't sound like commercial. You said that's not the case.
No, we're turning away from, we're
Wow.
looking at
Wow.
transactions and saying, no, we don't
That's
think we want to do
amazing.
this. No, not now. Let's look at this some other year,
Really?
not this year.
That's amazing. Okay,
Yeah.
good. Tayo, go ahead. Do you have anything, Tayo?
I don't
I
have
think we
anything in
have
the
about
real
10.
estate space.
Yeah, I think
So
we
most
have
of
about
mine, it's
maybe a
more
few
in
more minutes.
networking and career space. So can I go with that? Are you okay? I've been going with that.
So what did you say? Sorry, I didn't hear you,
I
Tayo.
said mine is not really in the real estate or commercial real estate or banking space. It's more about career.
Okay,
So
let me do
I
one
was
more.
hoping to
Let me do
go
one more
after
on
you. Yeah.
commercial. Then
Okay.
let me give one more. So, one of the things I wanted to know is what's the biggest misconception about commercial real estate lending? For those out there who have not the fear because of a myth, right? So, what's the biggest misconception about commercial real estate lending?
Ah, that's a huge, I think almost everything we do
Yeah. Yeah,
is
because there are
is
people who want to, but there's just this fear, like, oh, maybe, you know, I can't afford it, or it's not for me, or. So what do people, what's the biggest, what do you think?
I think basically one of the biggest is that, like what you just said, people feel like, oh no, this is not for especially in our community,
Mm,
our the immigrant community.
mm,
It's we've been it's been drummed into a lot of us that, look, you want to own a commercial property. Who are you?
who are
It's
you?
not for you. What
Yeah,
do
Yep.
you mean?
yes, yeah,
There's a lot of
yeah.
they've made commercial space look like it's so complex that you
Mm,
will not even understand it in the first instance. So don't that's a big myth. They've made people feel like it's not for a certain demographic.
Possible. Yeah.
Yes, it's not for a certain demographic. It's not for a certain oh, what do you do? What?
what?
Who are
You want to
you?
own commercial?
Yeah, you
Where do
want
you
to own
come
a strip
from?
mall? What? You want
Who
to,
are
yeah,
you?
so there's a
Can you
lot of,
afford it?
yes, there's a lot
Okay,
of
okay.
misconception in that space. Um,
Sense.
and there's a lot of, because of that misconception,
Right.
it's
Right.
made people just look away from that space.
Mm,
And it's created that fear of the unknown to a lot of these people, a
okay.
lot of those people that would, that would just naturally be happy to be in that space.
Mm,
I've seen a lot of met with a few folks that said, you know what, I own 6, 7, residential single families. It's
mm,
so exhausting. I
mm,
want to do something. I want to be able to sell these things and do a set
yeah.
1031 exchange and put
Yeah.
into something else.
Commercial.
Yeah, because it's okay. It's one building, 4 tenants. I'm good.
I'm
I
good.
don't even need to collect it.
Mm,
It takes care of
mm,
itself. It's
right.
triple net. I don't even need to do anything with it. I don't even need to hold insurance on it.
Mm,
They would do their insurance. In fact, they would hold an insurance for me.
right.
And it's because it's also a triple net deal.
Mm,
They're responsible for soft maintenances on this property.
mm,
So there's a lot of misconception, especially that one, that it's not for a certain demographic set of people.
okay.
And so because of that, people have stayed away from it,
Great.
and they've just they do not want to be part of it. And another thing is a lot of people are too afraid to approach sellers with transactions of, do you want to carry the note, Mr. Seller? Do you want to do a seller carry note? I don't have to go to the bank today, but
Mm,
if in the next couple of, if you carry this note for X amount of period, you know, there's a lot of deals that don't see the bank until a couple of years down the line.
Okay.
You know, the seller and the buyer have an agreement, and it's carried on. Nobody's, you know, saying anything about it. I have one where the seller is carrying the note, and until when I'm, you know, it's a 5-year note. Yes, the seller makes money on the process, but I don't have to worry about anything today. I can take my time and build my down payment to the bank.
Okay.
And I still own that property, and I still have, you know, the tenants in that property.
Very nice. Triple net, could you just explain triple net a little bit before I hand over to Tayo?
Okay, triple
I've
net.
heard that before, but yeah.
Triple net. Okay, I'm looking for the easiest way. So triple net meaning, just in a nutshell, there's a lot of the insurance, taxes, in most cases, and some certain level of repairs are carried by the tenant in the building. In most cases, triple net leases are very common in the commercial space, where the landlord transfers almost everything down to the tenant, and the tenant is responsible for a lot of, you know, the basic needs of that property, and including minor repairs or, you know, non-structural repairs.
Okay. That works. So in this case, the tenant is paying for the things, like unlike the residential where the tenant is calling the landlord to do this or do that. And commercial, tenant is responsible for, you know, basic things, right?
Yeah, so triple net is one of the most common leases.
The building maintenance.
Yeah, so
you know, things like that.
It's one of the most common leases that most commercials in the commercial space that we see. We see a lot of triple net.
Okay.
And triple net being NNN, or you just call it triple net. So it's a very common lease.
Yes.
Your tenant is responsible for the, you know, the taxes, your property taxes.
Yes.
They're responsible for repairs, for insurance, yes,
building maintenance,
and repairs. HVAC. Say the HVAC system breaks down. Say any non-structural changes.
Yes. Okay.
Yes. The roof, there's a leaking roof, the tenant is responsible for it. Parking lot needs to be repaved. The tenant is paying for it. So yeah, it's passing on everything onto the tenant.
Yeah. So I can see where a landlord that owns maybe 4 residential buildings, and he's the one handling all of that because they're calling him for everything.
Yes.
Would likely just say, you know what, let me just buy one commercial and transfer everything to the tenant because it's the same thing, more or less. So even make more money.
Yeah, I mean, your tenant is never going to call you to say, "Hey, my toilet is leaking."
Exactly.
Oh,
they handle it.
There's plumbing problem.
Yeah, exactly.
Good luck to you.
Yeah.
I better make my house, my building standing, not my house, but my building better be standing by the time I come to the building. You're fixing it. So you know, it helps them. It helps you predict your cash flow. You know what you're getting, and that's what you're getting. You're not responsible for nothing else.
Nice. Yeah.
So that has been a very great. That's one of the things that a lot of our folks do not know about within that space. And so this person is like, oh my God, I don't know what I'm going to do. I am exhausted, because now every time there's broken faucet in your residential property, or there's I don't know,
and even a light bulb is burnt.
And utilities.
Even the light bulb is burnt. They're calling
you. They're calling you. Oh, the fridge handle has come off.
They're calling you. The landlord.
So it's like, you know, you have 8, 10 of these, and you're running from property to property. You know, you get burnt out quickly. And in some cases, you have a property. In years, you've not even seen the property. It's a commercial property. You have no business with it. You drive past it and say, "Oh, I own that property.
I own that."
You're going
Yeah,
on your
that's
way.
it. Money's just coming in.
More money, less stress.
Very
I
little
like
or no
that.
stress. Yes, thank you.
I like that. Okay, Taya, I'll leave you to do the last question so we can round up. Thank you so
Yeah,
much.
interesting. Thank you so much for going through all that. And now, since our time is almost over, I just want to wrap it up with this. And this is the final question, and you can pivot to other areas like networking when you are describing this or other aspects that you want to discuss in closing. But you said a lot about C-suite and glass ceilings and things like that. I wanted to ask you that in this type of country for immigrants, how first is how can we plan our career to become C-suite at some point, and what are the challenges of dealing with them while you're going in that route?
Yeah. So that's a great question. We do have a quite a number of immigrants in the C-suite space. Actually, just off the top of my mind, Korede Alabi, is the CFO at was True Valley String, was it Anderson Construction? My very good friend as well. So there's a lot of what's his name too is also. So there's quite a number of immigrants like us that are in these positions, and they're very open to connecting and meeting. They're not going out of their way to say, hey, I'm here, this is me, I am a at the top at so company, but they're just easily just minding their little business, and then that but when they're very approachable, and then they're willing to also help the next generation of of youngsters pull them up to these positions. But you see, some of these folks in C-suites are very, they're very quiet and laid back. Some of them, you'd hardly even know who they are. They're just very quiet people in their quiet little corners. So a lot of the work in these cases is the research is going to be done by the person who's looking to want the mentorship or need that connection. You're gonna have to be it, even in non-immigrants, even and other
but
races.
I said in becoming, trying to become, right? So okay.
Yeah. So one of the key things is you're gonna have to
connect
and I'm a big believer in, you need to be able to speak to those who have walked that path before to understand and get some of their perspective. Because if somebody has walked a certain path and they've also seen other ways, they've learned experience from their work on that path, they'll be able to genuinely give it to you and say, look, you're doing good, but I think you should avoid A, B, C, D, or go about it here and there and here and there. There's a lot of these folks I still reach out to and say, come on, what's up with this? What do you think about that? Right. And then, in the cases they're like, oh, don't do this weird, do this one. Or no, don't do anything. Just sit where you are. Don't do anything. Don't, so there's, you got to be able to reach out, do the research, find those who are doing that which you want to do, and reach out to them. You have to be able to do a lot of networking yourself. As they say, in a Yoruba adage that a child that wants to be carried by the parents will first lift their hand up. Yeah. So it takes you to raise your hand, do the legwork, reach out to these people, pound the pave, network, to be able to meet these folks and say, Egbon or Auntie, how are we getting to this point? What are we doing? How do I need to, I want to be like you. Let me get to, eventually get to you. And another big, myth that happens in most of these places is like, no, they're not going to help you because our people feel like They're gonna come and want to
gatekeepers.
take my
it.
seat.
Yeah, take my post.
Yeah, and what they don't understand is the person that was hired into that position has put in the work to make it to that position. And there's nothing you are going to go say to that person's supervisor that will make them change them for you. It doesn't work that way.
No. Oh my God, that's true. That's absolutely true. Yeah. So Tayo, you're on mute, Tayo.
Yeah. So yeah, I think that about covers. I wanted to ask. I have a couple more, but I don't think we have the time. So we
No.
probably need to bring Tejan back to help us a little bit further because this was
Yes.
really good. We learned so much.
Yeah.
Yeah, thanks for sharing. I think for me that's it for now. So
Yes,
we'll try to
honestly, I
use
do
that
have
time
at
to
least
bring
three,
it on.
four, but maybe we can do a part two some other time,
Yeah.
and just dive in a little bit deeper, about challenges navigating, in the commercial sector, the commercial lending,
Sure.
So we will have a part two. We'll have a part two. So, but this has
Anytime.
been great. This has been great. Thank
Anytime.
you so much. I've learned a lot, I have learned.
Same
I
here.
took
Same here.
notes. I've
Same
learned a
here.
lot. So really, thank you for your
I took a
time.
full
Appreciate
note,
your time.
about 5 pages.
I'm honored.
Yeah,
I'm honored.
thanks. Yeah,
Yeah.
I'm telling
yeah, and I do
you.
admire you and your career path greatly. Yeah, the senior VP, that's so admirable. Lots of work
Yes.
has gone in for sure.
Yeah.
Great
I don't use
network, and I
those
think you might be.
titles anymore. If you see my LinkedIn, I said humanitarian.
Yeah,
Those
yeah,
titles don't.
Yes, I do agree with that. I like that humanitarian. Yes, I do. Yeah.
I believe in my community. I believe in adding value to
Yeah.
my community. That is the most important title I want.
Yeah.
Any one of these things.
yeah.
Absolutely.
Coupled with humility. See,
Yeah,
to
please
crown it
add us
all.
to your mentoring, Abby.
Yeah,
Add us to your
absolutely.
to your
So,
proteges, Abby. What do you call them?
yeah,
Thank you so much,
thank you so
Thank
Mr.
you.
much. This was
Thank you
really
very
good.
much,
I
sir. Thank you,
appreciate it.
sir.
Thank you. So have a good one, everyone.
Thank
Thank
you. Thank
you.
you
Thanks
very
for
much.
joining
Yeah,
in.
All
Take
right.
care.
yeah.
Okay.
Thanks. Okay.
Bye.
Bye-bye. Bye.